Hi there, and welcome to our latest edition of Money Talks, where we take a look at all aspects of the rural economy as it affects you in the ag sector. Three of New Zealand's biggest agricultural players are going for gold, unveiling a new strategy with big government dollars to turn our red meat sector into a money spinner. Will it work? And what's the state of rural lending? How tough is it out there? What can farmers expect in the coming months? And what's up with interest rates? A report from a man who toils on the farmland front line. Meantime, across the ditch, does it really matter which political party wins the election on Saturday? We examine the perks and the pitfalls depending on who seizes power in Australia. All this and much, much more coming up. But first, let's go to ASB economist Tennent-Brown to talk about our dollar, which pundits are picking to dip below 70 cents. Chris, thanks for being with us. The big question, how low will it go?
Well, we've already seen it dip just a touch below 70 cents for an hour or so. But all you need is a good night like we saw last night, where investor risk appetites improve and we're back up at over 71 cents again. So I think we're still stuck in that range around the 70 cent area, and it'll get up towards 72 if the world gets a little bit confident. Maybe it'll dip below 70 if we get all pessimistic again. But we're not going plummeting back towards 60 anytime soon, I think.
Chris, when you look at the world economies now, do you think that there will be another dip into recession? It's not looking that strong still.
Well, that's the concern everyone's got at the moment, as you know, we get a very soft patch of data like we're having now. People start talking about a double dip, but I don't think that's going to happen. Certainly we're seeing weak growth out of some areas, but the developing economies are still charging along and growing at reasonable rates. So I think we're going to actually see reasonable global growth, but it's going to be a bit of a two-speed globe for a while.
And economists are worried about Japan now. Their growth has slowed to a crawl. That's not good news, is it?
Well, China's, I've always joked, is the world's second biggest economy, with ambitions of becoming the fifth biggest economy. And now their growth is the worst out of the big G7 economies in the second quarter. And China's overtaking them as the second biggest economy in the world now. It's a concern, but Japan's been struggling for 20 years now, but it's still a very big economy.
In July now, figures coming out of the U.S., and of course, if they turn over, we all feel it, don't we? It's still not looking good. Their retail sales are very soft. What's happening in the U.S.?
Well, they've still got a lot of indigestion in the housing market. You know, you can throw policies at problems like the housing market to try and keep it going. But at the end of the day, they built an awful lot of houses. A lot of people borrowed a lot of money to buy houses, and it's going to take a long, long time to work through that. So now we're seeing pretty low levels of house sales, pretty low level of construction taking place. But that's the world that we live in as we deal with the problems that we created over the last 5 or 10 years. I don't expect to see a strong level of housing activity in the States for a long time. But at that time, we are seeing things like industrial production and capacity utilisation slowly recovering from the recession of the last few years.
Goldman Sachs over the U.S., of course, is predicting a double-dip recession by as much as 30%. There's a 30% chance, that's saying. Do you agree or disagree?
Well, there is a reasonable chance of a double-dip recession. You've got to carefully manage your exit strategy, and I think for years we'll be concerned about either the policy fade as the US administration starts to wind back some of their expenditure, or if they don't wind back their expenditure, we'll be concerned about the amount of debt that they're issuing to pay for these policies. So they're going to be treading a fine line for years in the States. And the upshot, I think, is that the US economy is going to grow at a much slower rate than what we thought it could grow at in the 90s or the early 2000s. That's just the world that we're going to be in, as one where economies like the States just grow at a slow rate.
So let's bring it on home. What's that mean for our farmers here in New Zealand?
Well, it means that some of the developing economies and developing markets are going to be where it's at for achieving strong export growth. And we know that the dairy exports up into China have been a great growth story. The other side of it is, as you look at economies like America, we can't forget that they're still there. They're still very big consumers. It's still the biggest economy in the world. Just because they're not growing doesn't mean they're not great targets for our exports. But you're just not going to see fantastic year-on-year growth like we did when their economies were growing at 3, 4, 5% per annum. They're going to be growing at slower rates than that, so they're going to be tougher markets.
Here in New Zealand, the Reserve Bank, of course, has to always wrestle with the official cash rate. Are they now likely to slow down the rises? What are you picking, Chris?
Yeah, we think that they are likely to pause as we go through this soft patch of data. If you think back to a few months ago, the recovery did look like it was on firmer footing, and now there are some question marks. Both abroad and here, we've had some soft data here, particularly the labour market data for the second quarter was disappointing. And so there's an increased possibility that the Reserve Bank will pause. But interest rates are still very low. If you look at the official cash rate, it's still very low. So I think they will keep tightening it. But not like a metronome. They'll probably tighten one, maybe two more times, and then pause to assess and see how the economy is going and what sort of effect the tightening that they've done to date has happened. And that's what happened across in Australia, and I think we'll probably mimic that sort of pattern.
The global grain crisis, of course, out of Russia. I see this week that they have said that, in effect, they believe they've lost 40% of their production. The global wheat prices have tracked back considerably. What are you hearing?
Well, I think whenever you hear of a supply shock like this, futures prices get whipped around. The 40% drop in production sounds dramatic, and futures prices spike up, and then when people look at it in the perspective of total global production and grain stores, they realise, well, this isn't quite as big a problem, and prices come back. And that's the nature of commodities. They get whipped up and down by weather concerns, supply concerns, and we see this in oil as well. Every time a tornado approaches the oil rigs in the Gulf, we see oil prices whip round as well. So,
steady as she goes.
Steady as she goes is always my view, and I'm glad that it's my Australian counterparts that have to forecast grain prices, not me. It seems a very volatile market at the moment.
Thank you very much, Chris. Coming up after the break, what's going on with rural lending in New Zealand, the latest moves and counter-moves on the takeover bid for New Zealand Farm Systems Uruguay, and how government money could kickstart the troubled red meat sector. But first, a question for you in our Farmers' Facts and Figures quiz. How much of your money will the government invest in the dairy and red meat industries through its primary growth partnership? The answer right after the break. Stay with us. Welcome back to Money Talks. Just before the break, we asked you how much of your money will the government invest in the dairy and red meat industries through its primary growth partnership. The answer, $144 million. The government money will be pumped into the primary sector for research and innovation in two of New Zealand's biggest primary sector exporters, dairy and red meat. Joining us now is farm consultant and rural business advisor Don Fraser. Don, what do you make of putting more money into these sectors?
I think it's a good thing. Shows initiative by the government, and I think they'll get some good outcome as long as it's wisely spent.
How bad is it in the meat sector? What are you hearing from your clients? Because you're out at the coalface every day.
Look, they just can't work together. They need someone to try and pull them together, I think, and to get some cohesion with them.
How is the system going to work? What is your understanding? I mean, they're talking about creating new products, perhaps, innovation, research and development. What does that really mean?
It's been hard to sort of work out what they're saying. They're trying to get some intelligence around it and trying to get people working together. I think that's the key thing around it. It doesn't include all the red meat industry, though, only parts of it.
Okay, Chris, what are you picking about this? I see that Dairy New Zealand and Fonterra are going to get a big slice of the pie. Isn't Fonterra rich enough on its own to be funding its own research? Why should the taxpayer foot the bill?
Yeah, well, that's a good question, and dairy has done reasonably well over the years. But I think in the area of research, it's always positive if you can get right at the leading edge, if you like, and try and improve productivity. Economists talk about that all the time, and trying to get the dairy sector and the broader agricultural sector more productive is a good thing, and that's where the research money will hopefully help make some progress.
But should the taxpayer be footing the bill? Is it really in our long-term interests?
Well, I think there's a bit of both. I mean, there is money going in from the industry. Dairy farmers are levied, and some of that money's going in, and a lot of research takes years to pay back, and that's where the government seeding it can be helpful, and that's goes for broader research, not just agricultural research.
Don, when it comes to the red meat sector, it's not going to be a quick fix, is it?
No, it's not. No, it's not at all. It's going to take a long time. In fact, they've got a 7-year window, haven't they? I think it's also the government putting money into production and improving our wealth, and I think that's really important. It puts the focus back on production and making money for New Zealand.
But I think ultimately what the guys and the gals in the meat industry have to do is to get together. Do they need a Fonterra type of co-op to make it really happen? Your view, Chris?
I think there's a bit of a risk that you hold Fonterra up as the magic solution and say, right, if we make another Fonterra for every agricultural industry, we'll have great outcomes. And one of the things I always remember with Fonterra is that dairy farmers are happy, maybe in part because of Fonterra, but largely because dairy prices globally have been so incredibly strong. And that's a global phenomenon, not something that Fonterra itself has created. The meat industry has got all sorts of issues. You know, they haven't had the boom in prices that dairy have had, and there's structural industries within the supply chain as well. So just saying let's make it like Fonterra and all our problems will be solved, I think, is overly simplistic and a risk. There's all sorts of issues that the meat industry needs to face.
Don, if there's any good news for the meat industry, it seems as if sheep stock numbers are finally stabilizing after, what, 3 years of dramatic losses. What are you hearing about that?
Oh, that's true, and the dairy expansion's sort of slowed a bit, although there's a lot of dairy support going on to the sheep and beef land and taking out, lamb, but it has stabilised, and I think that's a really good thing for New Zealand because, the industry was looking really shaky. I guess the other issue around the red meat industry is that there's been decades of fighting and arguing in amongst those red meat suppliers, and I think it's a big issue. If they can try and pull people together and make them work together, fantastic.
Don, let's talk about rural lending now. What are you hearing from the people you consult with every day? How tight is it for farmers to get money out of the banks?
It is really tight out there, Jeff and Eve. I'm sitting beside an ASB banker here, but it is really difficult. If you're in trouble and you can't pay your interest bill, the bank will only allow a little bit of money to pay your diesel and your food and maybe your wages. It's a really difficult time. Banks are moving to get some farmers who they perceive as being out of line and having debt too high to realise their asset. And, that's a really important issue for farmers maybe to think about it. If there's no way forward, then you're better to work with a bank and take your equity out than let the bank get in control of your farm and force you to sell.
But it all comes down to farm prices at the moment, doesn't it?
Oh, yeah.
They continue to fall. They're not doing well.
No.
What are you seeing every day?
Well, good farms are still selling reasonably well. I mean, they're selling for like that $35 to $40 a kilogram in the North Island and down to maybe $30 in the South Island. So there's still reasonable demand, but the banks are reluctant to lend. They'll only lend to very good clients. They don't really want to